Okay, welcome to my stock market technical analysis video. I had an appointment this afternoon, so I couldn't get a video out before the market closed, so thought I'd get it out now so we can see where things head tomorrow. Starting off with triple Qs, guys. A little bit of a rally today. I don't see any technical posture. I don't see any change in the technical posture of the market. Now, I know, again, today was up. Triple Qs rallied right to that 200-day moving average. And that's where we closed at, right there at 366, right at that 200-day moving average. So we'll see what tomorrow brings, but as of right now, we're at kind of resistance area. I don't think we're going much higher, but and if we do, we'll start to look for areas to stop out at. Rolling back, if you look at former corrections, you're going to get you're going to get chop. It's just the nature of a correction. Like, here's an example. Going to this, just looking at this correction, you kind of move down, you chop up, you come down, you go back up, and then you drift lower and make that next leg lower. So that's what it looks like to me. Looks like we're having just a kind of final rally right before we roll over. The other thing is we have this flag pattern. Now this flag is getting a little extended. So I don't want to, use this flag as a be-all, end-all. But, it's still within this flag pattern. And we've got resistance right up there at 369.40. So I don't see any real indication. If we look at the hourly chart, maybe what we'll do is pop over this recent high right here. So this recent high at 369.40, just make a slightly new little high right above there. If we do that anytime soon, then we're probably going to have negative divergence. We'll have negative divergence on the PPO for sure, because it'll look like that. And, possibly on the RSI. We'll see about that one. But as far as I can tell, all I see is a downtrend. We have a counter trend rally. We're looking to sell the rips. And, we rallied into resistance here, sold down, rallied again today, closing at the 200-day moving average from below. So there's no recovery. There's no technical recovery. And I know everyone, I see a lot of people say, oh, market's bullish, we're going higher. Because today's bullish, that doesn't mean the market's going to be bullish tomorrow, okay? We haven't broken above any kind of key resistance levels. We're rallying into major resistance, and that's it. That's really all I see. Looking at the SPY on the hourly chart here, you can see we made an equal high basically. So high today, former high, that's negative divergence. See the momentum, see how it's less? Okay, like that, slight negative divergence there on the RSI, and the PPO has negative divergence as well. So this high today, although seemed very bullish, did put in a divergent high and has a higher probability of failing. When I go back to the daily chart, the flag is definitely getting played out. I don't know about this flag anymore. But again, we're just right there at that former high. This is where we should get rejected again. Big resistance overhead, so I don't see us going too much higher. But of course, if we start to go higher, we're going to want to start to look for areas to stop out of our trades at. But as of right now, I think we're going to get rejected. I think the CPI comes out tomorrow, so perhaps that comes in hot, further increasing the chance that the Fed's going to do more rate hikes. I don't know, but ultimately, no technical damage has really been done. And small caps, no real recovery either in the small caps. Small caps were up, almost 2% today, rallying into major resistance. So again, there's your major resistance. Clean this up right there at about 209. All right, this was a big year-long trading range. We broke below. We haven't recovered this. We're trading right into resistance. This is the area you want to be shorting at, all right? You want to sell the rip, all right? And as you rally into resistance, you look for that to roll over and get sold into and then go down. Now, we might chop above it like intraday. I can see a stop rate or something like that where they kind of pop above here and maybe do something like that, then roll over. Or we might just stop short and not give anybody an opportunity to get that perfect short entry. The bulls right now, if they were bullish on this trade action here for over a year, they're hoping they get their money back. They see the gains coming. and they're almost at break even if they bought down at support. And if they're not, they see, you know, everything feels very bullish, so they're not getting out of their positions. They're not exiting their bullish positions. And what that's going to do is if you roll over, they all of a sudden realize, oh my goodness, I'm taking on more and more losses. That's fuel for the next leg lower as they start to panic sell. All right, so that's some of the psychology behind what's kind of happening. I don't see a recovery of any kind of key resistance levels. We haven't broke through that resistance, so still looking to sell the rip. Okay, Lyft, pretty strong day today, up almost 7%. A little bit more in the after hours, but I don't count the after hours too much. What did we do? We traded right into major resistance. So you'll see here on Lyft, you've got a key level of resistance. It's basically right. It's kind of a zone, but it's pretty much anywhere from 45.95, you know, we'll call it 46, down to about 43.63. All you can see all these reactions. This was support here, support there. There's another support, little reaction right there. And then once it broke, it was resistance. So once we traded here, it was resistance all through here. We sold down, bounced back into major resistance. All right, so technically, this is the area where you'd want to establish a short or, you know, add to a short. This one did have bullish divergence on the daily chart, and I did point it out at the time when we were down here at the support level on the daily. When we traded down to this key level right here at 34.84, we started to put in some bullish divergence right in here. So I pointed that out, and that was indicating that we were likely going to get a reversal. But the only thing is there's this gap to fill right down here at 32.03, and we never filled that gap. Came close, didn't quite fill it. So, you know, I thought we might fill the gap. This might, you know, that might have been the low in this Lyft stock. Another possibility is we come down, run down and fill that gap, do it relatively quickly, and then keep that bullish divergence intact. I'm not so sure at this point. Again, I shorted the thing right up in here, up at this 45 area. So we're pretty much at break even right now on the trade. You know, much higher from here. I'll probably just stop out of it for a very small loss. You win some, you lose some. But again, I still was looking for that gap fill. So we'll see what the next couple days bring. Here's Ford. Again, I talked about how I closed out my short yesterday on Ford. We're popping today. Big resistance is right there up at 1908. So I think we could probably trade up to there, maybe pop above it just for a day or two and then reject. All right, so I'd be looking and I'd be interested in reestablishing a short as we trade up into that $19 area on Ford, looking for more downside. And the reason why I think there's more downside as well is as we were trading down, there's no bullish divergence. You'll see that we're just trending down in momentum, trending down in price. So I just see downward price action in the future. This one popped up on the radar for a long trade. This is a Chinese stock, so it's definitely going to be a lot more volatile, and it's also a penny stock. It's only $1, so I took a little shot at it. Nothing really large, very small position. Again, you want to adjust your position size based on the volatility, and this one's extremely volatile. So by no means would I ever suggest going all in or even taking a full position on something like this. But you see here on the daily chart, the Chinese stocks have been really murdered out, and this one has been downtrending, but it's been building big bullish divergence on the RSI and the PPO. See the bullish divergence? So I was looking for a break of the trend line resistance right there, and there's your buy signal today. All right, up 15%. Nice daily breakout from the downtrend line. I'm looking for higher prices on this one. Target, you know, you also have this big gap right up here. So I would say that'd be a pretty clean target up into that area. But I've got these two levels of resistance. There's probably a small one right here. Not much though. Yeah, we've got a little bit of a level right in here we were holding. So there's our levels to watch. First level 232. Next level is about 269. And final level 651. I'd expect reactions or pullbacks at each one of those, and each one of those might be the high And this thing, from where it's at now, that's a 100% jump up to, 240%, all the way up to a potential 500%. Massive gainer. Again, super volatile. So this thing's going to have huge pullbacks. It's really hard to set a stop on this one because it's going to be really whippy. So what I do on a stock that's going to be extremely volatile is just, take a small position size. All right, let's look at gold. Gold rallying. So again, gold just continues to coil. We're just coiling within this triangle. We're getting close to the apex. Maybe this wants to, it should break soon, one way or the other. And it's likely going to be, we could break tomorrow if the CPI comes out hot. I don't know what's going to happen, but ultimately, I've made a case for a bullish breakout on this. So no change. Alcoa, I pointed this trade out yesterday. I took a short position on it. No change really from today. Just another test of the trend line right at resistance. So you can see big trend line coming off the March 2020 lows, clear upward price channel here. And we've been backtesting. So we backtested all through from underneath. And there's another backtest. So we backtested yesterday. And we backtested again today. And I see no change. We're just testing resistance for a couple days, and then likely we're going to move lower here in the near future. Big negative divergence. Unless they continue to go higher, we're not going to take out this divergence. And let's check this RSI. Maybe we've just started. Yeah, it looks like we've just started to take it out. So we'll see how that plays out. If it turns down now or tomorrow, we'll probably still have that divergence. All right, so I like it, as a short right into major resistance with the negative divergence and no change. And Nvidia, here's a daily chart on Nvidia going back to March 2020. So there's March, let me grab the tool. There's March 2020 right here. All right, and we have an upward price channel. So you can see support all through here. Got every kind of tag of support circled. We broke support with a sell signal. That also came with big negative divergence. All right, that divergence had been building right up in here. So we got a break of the bullish trend, and we're backtesting. All right, so we break, and we're coming in for a backtest. We could go a little higher. We could run up to this 275, 276 area, maybe another 3% or so higher, but that we're coming into big resistance. Also, big horizontal resistance right there at about it's about 270, 272, we'll call it. All right, so that was a support shelf in the past. All through here was support. We finally broke. This is your zone of resistance right in here. So again, no technical change. Stocks don't fall straight down all at once. They're going to rally into resistance and then make the next leg lower. They're going to rally into resistance. So right now, I'm still treating this as a sell the rip market, and it looks like we're running into the resistance. This is the key level where you'd want to short at right in here, and then we look to roll over here in the near future. But most people don't want to short on strong days. They like to wait till the stock's crashing with a big red day. Then they want to short. But again, the most objective area where you have the lowest risk of losing big amounts of money is to short right here at the key resistance. If you short after a big red day and then they bounce it against you, there's potential for bigger losses. If you short right at resistance and we're wrong and it just pops up and keeps going higher, you can be wrong small because you shorted right there at that major resistance. Okay, that's really all I have for right now. So I'm going to get the video out, a couple new ideas, and just an update on some of the old ones. Let me know what you guys think. Leave me a thumbs up, leave a comment. Check out my stock market technical analysis course, link in the description below, and I will catch you guys.